Ladies and gentlemen, welcome back to the podcast. For the last couple of months, I have been beating this horse to death. So let's do it again. AMP is not a speculative token. It is a use case token. Flexa is not a crypto company. They are a company that uses crypto. Huge distinction here. Flexa cannot do what they do without crypto. It wouldn't work. At least I cannot entertain any way they could make it work because nobody is going to buy bad debt on a dollar for dollar ratio. If Flexa cannot use hypothecation to recover the bad debt, then they are a traditional pay rail, and you know what? Good luck with that. The most important thing to the Flexa network is stability in the price of their collateral. It must be stable. Due to the nature of them using their collateral, AMP, it must have a steady fixed point of value without wild swings. Wild swings would make it impossible for Flexa to accurately gauge how many transactions they can process or the max value of those transactions if they are never sure from day to day what their cap is. And this is what we are discussing today, right after this. I could not be happier about the AMP price right now. There's a few reasons, but the biggest reason is that it has been relatively stable over the last month, with the exception of the Coinbase bump, which was exactly what we said it would be, short-term speculative bump. The price of AMP is unchanged in a month. That's fantastic. That is necessary. And I know the short-term folks don't want to hear this, and I know the people new to crypto don't want to hear this. Crypto is where you come when you want to get rich quick, right? Throw in $100 and pick out your Lambo. That's crypto. But you see, Flexa is not a crypto company, and AMP is a use case crypto. Its value is derived from usage. Its long-term gains are derived from usage. Every formula having to do with valuation of AMP has the variables plugged in for anticipated usage. It's not speculative. It's never been speculative. It's not a coin. Now, this might be a fundamental misunderstanding of the crypto market in general, that everything gains its value from liquidity, but AMP doesn't. At least it doesn't gain its long-term value from liquidity. As can be clearly illustrated from the Coinbase bump, lots of liquidity purchases will in fact rail the value of the token, but it won't stay. It can't stay. Did the staked amount increase during that massive amount of volume? All of that volume? Not much. Not much. People are having a hard time coming to grips with exactly what Flexa is and what Flexa does. So is it any wonder that they just would not have a firm grasp of the underlying principles of the crypto token they use to make it work? Flexa is a revolutionary idea, and they take time to implement. I get it. I get it all the way down here, man. Crypto moves fast, and the majority of folks that invest in it want that fast movement. They want the action. It's fun. It can be rewarding. It certainly gets the blood pumping. But fast action is not investing. It is speculating, and AMP is just not a good one to do it in. That very action is detrimental to Flexa because, as I mentioned in the intro, they need to have a steady, predictable layer of capital to be able to accurately gauge how much they can process, how much risk they can take on the network as far as max per week per user. They need steady numbers. And before this video turns into a total downer, let me mention that in November, it was trading at .005. Today, it is trading at... So let's not pull the blanket over its face quite yet. Its growth has been phenomenal. And considering the bearish market, the fact that it is holding so well is also phenomenal. You cannot think of this one as a traditional crypto because it's not. People are still trying, though. They are still trying to ride it up and scalp it down. I think it's just in the perfect place for it right now because it survived the Coinbase bump so well. It got the visibility, got people talking about Flexa. The exchanges gulped up some of the liquidity. It did just what it needed to do. But after that wild ride, it gave the investors a final good opportunity to invest while it's still affordable. Nickel and a half is a gift. But now comes the work. Now comes the part where it has to be implemented. Now comes the part where it has to be shown to the merchants that it works, that it can in fact process any transaction, that solid numbers can be shown to these merchants. Look how well it works. Look how fast it works. Look how safely it works. And the most important part, look how much money it saved you. That's the part, guys. That is what the merchant cares about. It's no one's talking about it now. AMP has certainly fallen out of favor. Just look at the volume, but it's holding pretty much the way the market is holding. The speculators moved on, and the investors are moving in. Crypto moves fast. AMP doesn't. It just doesn't. Speculators move fast. But investors know it doesn't always work that way. The big paydays don't happen overnight, not in a solid product. They take time. This is a dollar cost average project now. There's enough staked to maintain its relative value. Now it is an investment, and you just cannot be in a better place for it. You still have time, man. You still have time. I know folks don't like price predictions. I don't give them because nobody knows for sure what it will do short term, regardless of what they tell you. They're guessing. Sometimes they're right, and sometimes they're wrong. It's about averaging those guesses. But you don't have to guess with AMP. You just don't have to guess. It's already shown you what it is capable of. Now it's just about volume of transactions. Keep the faith. You are in a unique product. Scalp when they let you. Stake. It's what it's for. So, look, man, that's it for this one. It's just a pick-me-up for the folks tapping their toes. You are going to be okay. The right project at the right time for the right price. That is AMP. Perfect. Live stream on Thursdays at 7 p.m. Central. Cheers.